Marc Chandler. Marc, Blake's a fan. I'm a fan. You have a fan club here at ForexAnalytix. Welcome
You
back,
guys should
Marc.
be in sales.
Huh?
You guys
I
should be
should
in sales.
I should be. I have been my whole life. Like me,
Well,
accept me,
I'm
listen to me.
I was going to say I'm going to leave you in the capable hands of Dale, but I want to say thank you, Marc, for joining me earlier this week on the interview, and hope you're having a great trip in New York, and we'll look forward to hearing your insights here with Dale. So I'm gonna mic out.
So what are you doing in the Big Apple, Marc?
I was at a conference, the Foreign Policy Association, which is an interesting organization. It's a bit like the Council on Foreign Relations, but perhaps a little bit less orthodox, interested in education and a wider audience. I spoke at a panel yesterday. The UN has their opening sessions this week, and so the Foreign Policy Association had these conferences around it.
Okay. All right. Yeah. What'd you learn? Anything that would give you a new narrative or paradigm with what you're hearing there?
Well, there's a lot of discussion about China, of course, and I still think that the sentiment that, like, sort of, if there's a consensus in the markets that such a thing exists, especially in the U.S. and I'd say Europe, maybe even Japan, that the big risk in the world is China. I don't see it that way, but I think that is really the general consensus. But I think that some of the talk that from other panelists yesterday sort of suggested that China is committed to trying to reflate the economy, and that there likely to be greater signs of its success in Q4 this year.
Okay, so how about the end of this depreciation of the yuan being part of what you heard? Because for a while, the action in U.S. dollar yen and the yuan were kind of married together, and the yen is pushing against the highs and the yuan is lagging this time. So anything in this decoupling where people think that China's getting it right if their currency rebounds?
Well, I kind of think that the currency. So how does China manage the currency? It manages it primarily against this basket, of which we'd imagine that the yen is a big part of it. But it's not only the mechanism of managing the currency, but I really think about the mechanism. And why are we selling the yen? We're selling the yen because of a big policy divergence, right? Even earlier today, the Bank of Japan didn't really give us anything to suggest an exit. They're the last of the major countries with negative interest rates. And so people use the yen. I mean, when we retail people buy something, an asset, we make an investment, we want that asset to go up. But I think that more sophisticated market participants and institutions don't think of it that way. Partly because when they buy something, they're not using their own money. It's OPM, other people's money. That is to say, you want to buy the bonds, or you want to buy S&P 500. Don't do it with dollars. Sell the yen, convert that yen into dollars, and then do it. So basically, have it so that you are short yen, long stocks, or long emerging markets. And because of the offshore RMB, we can use the Chinese currency as a funding currency.
I heard that came out about a week ago, that started making the rounds, that people were going to start using the yuan for a carry trade. Are they doing
that? I think that's what people have been doing. I think that the reporters just caught wind of it.
Okay. All right. Yeah.
So to me, what this means, Dale, I think, is that it's going to be hard for the Chinese to stop the RMB from selling off. And today was only today it looks like it's going to be the second day that the dollar closes above 730 against the onshore yuan. The other thing I point out is that typically the offshore yuan honors or respects the 2% band that's really applicable to the onshore market. But in recent days, we've seen the offshore market disregard the onshore band. And so I think the market's still bearish on the Chinese currency. And we did see a little bit of a bounce in Chinese stocks today. The Chinese are trying to talk about maybe lightening up or reducing some of their capital controls to encourage foreign investment. And so I think that might have helped the Chinese stocks. I do like Chinese stocks in general. I think on valuation grounds. I kind of thought to myself a bit earlier this summer that do you want to buy the stocks of a country that's raising interest rates and likely to have to tighten fiscal policy, like in the Eurozone or the US? Or do you want to buy the stocks of a country that's easing monetary policy and likely easing fiscal policy? And so I thought the answer would be yes. And so I've got my toes wet a little bit in the in Chinese stocks.
Do you do it through indexes or individual issues like FXI? Is that what your go-to?
Yeah, no, I did it through the MSCI index. I don't know enough to trade individual Chinese stocks. And these days, I'm not sure what you're really buying because they don't really trade in the US as an ADR per se.
Okay. Any reaction to Xi's move on Apple, tit for tat, as a retaliation? Do you think that there's, this is an element of what's happening with China? And you know what, if you were a Chinese citizen living in a communist regime, would you use Apple phones when you see all the government officials banning them and not using them?
Yeah, I don't know. I mean, I think that we've done a good job here in the US at blocking Huawei. We try to discourage people from using Chinese apps. So I don't know, partly tit for tat, but partly if I were in China, I'd probably do the same thing. Remember when Obama was visiting Germany and they found out that Merkel's phone was taped, was recorded, was bugged, and not by Russia, not by China, but by the United States. And so I think that if leaving aside communism or whatever system China has, I personally don't think that the US would feel that much better if China was a dynamic democratic country. We would still be threatened by it, given the processing of rare earths, given the dependency that we have on things like even X-ray dye.
Chemo, all the shortages, people that need chemo drugs, they come from China. Everything does.
So it doesn't make sense that the U.S. is so dependent on China, but it doesn't make sense that China is so dependent on the U.S. either, given the geopolitical tensions. And again, remember, Dale, earlier in our careers, there was a congressman from Missouri who took a sledgehammer to Japanese and South Korean cars because we thought they were subsidizing them, giving unfair advantage of them, blocking our cars from their markets. And so again, I just think that we in the U.S. play too big of a role, or to emphasize too much about Chinese communism. I grew up in Chicago. Chicago is a one-party state. Literally, the Democratic Party has run Chicago and Cook County since almost as long as the Communist Party has run China. And so I just think that we make too big of a deal about it, but China is definitely a competitor, economics and politics, leaving aside ideology. So I sort of think of it a bit like Catholicism or Christianity. Christianity did not spread because people found the word. Christianity spread ultimately at knife point or sword point or gun point. Wars expanded Christianity. Similarly, no one's rushing around, no one in the world is rushing and saying we got to adopt communist ideology. I think that what people want is an alternative to the US. So no one likes the bully in their neighborhood. It's always a bully in someone else's neighborhood that we try to side up with. But I think that in the near term, China is going to have a tough time controlling the RMB when the dollar is so strong because of this policy divergence.
Okay. Do you think Chicago being Democratic all those years were partially responsible for the terrible sports teams that we had to deal with growing up?
Yeah, I'm still a Cubs fan, but it is mostly scar tissue.
Oh, I tell you what, it is great training to be a trader, to be a Cubs fan, because you learn to live through adversity and disappointment. Anyway,
that's true, but the danger for traders is hope, right? We do our homework. We have an idea about how to manage our risk and our exposures, but hope is not the basis of a strategy, despite my love for the Cubs.
Yeah. I say like hope is the oxygen of life, but the carbon monoxide of trading.
Very good.
What do you think of all this central bank activity? What was your takeaway with, I think Blake said 42 central banks were active this week?
Yeah, so of course, I think the Federal Reserve is most important. And I think what the Federal Reserve, oftentimes, I'd say that what central banks do is more important than what they say, but it's not true this past week. What the Federal Reserve said was important. I think the most important thing of what they said is that interest rates will be held higher for longer. And what that means in practice is that even though the Fed didn't raise rates, they took back about 50 basis points of cuts that they anticipated last year. And when I look at the Fed funds futures, now the market had been leaning in that direction anyways, thinking about the first cut won't take place till closer to the middle of the year. And that's more or less where we are now. Maybe it's a Q3 next year for the first cut. But I think that signal, and I see that chart you're putting up with U.S. interest rates. Of course, U.S. interest rates rose on it. And I think that is the key support for the dollar. Even though, like what you guys were talking about earlier, European
Yield.
rates have risen as well. But
Yeah.
the U.S. economy is in a better position to withstand higher interest rates. I look at that Atlanta Fed GDP Now tracker, still looking at something like 4.9% for Q3, which is, it's probably faster in Q3 than Europe's going to grow this whole year.
Okay. And there's also the narrative that when there is a pivot and rates begin to come down, that they'll come down faster in Europe and elsewhere in the world than here in the US. So the dollar won't lose that interest rate advantage. Do you
Yeah,
agree with
I
that?
don't know about that. I do think that there is when I look at the swap market, the market's pricing in an ECB rate cut also around the middle of the year, fully discounted by early Q3. But for me, in my experience, I'd say the Fed leads in both directions. When it's tightening, we just do things bigger. When we're tightening, we tighten more aggressively, including on QT. And when we're easing, we ease more aggressively, even though we don't go below zero. So I don't know. I do think that the dollar, once the U.S. economy breaks and the economy weakens, I think interest rates will come down. And I'm thinking that despite all this optimism and this this U.S. exceptionalism, I don't think it's so exceptional. You tell me that the U.S. government will double its deficit this year, and real wages will go up. And I say, yes, that's exactly what economists expect to underpin interest rates and the dollar. So I think, though, that beginning next month, we're going to see a major turn in the U.S. economy. I'm looking at a lot of headwinds. Not only is the UAW strike going to broaden, and many of us have to pay back student loans for the first time in 3 years. But I'm also watching this higher oil prices. And I know on the first cut, higher oil prices, we see, it's partly why CPI, PPI, and retail sales were elevated when we saw those reports. But ultimately, I think the Fed looks through that. That's why they focus on the core rate of inflation, excluding food and energy. And most of the U.S. economic downturns in our lives have been preceded by a spike in oil prices. And I think that, to me, what's happening, it's not that the OPEC countries are ganging up on the U.S. or anything like that. I think it's pretty straightforward. Many U.S. states, Europe, Japan, are talking about getting rid of internal combustion engines in 12 years. And here I am in Saudi Arabia or the Middle East, and I've got a lot of wealth. A lot of the wealth of my country is still underneath the sand. How can I maximize that? Because my big customers are going to be having much lower demand if they get rid of internal combustion engines. So I think this is about national self-interest. And I think that Saudi Arabia in particular has shown itself to, again, want to be the swing producer.
Okay. And Mark, did you make anything out of, wasn't much hoopla about the launch of the BRIC currency? What was that?
We think about the BRICS or now the buzzword Global South as if it's a singular noun, but it's not. I'll give you a quick example about what's happening in the UN. Brazil and India want to become part of the Security Council. China and Russia are blocking it. Here's what happened this week too. Poland,
Interesting.
who's annoyed with the grain imports from Ukraine, says they will not be sending any more of their weapons to Ukraine. Poland will still be this conduit where other countries, NATO countries, other allies can put weapons into Ukraine, but they're not going to be Polish weapons anymore. So I think that the war in Ukraine is going to continue. And if I was in Russia or perhaps China, I would wait out the West. Already we're seeing Congress in the U.S. Try to resist more aid to Ukraine. And this is before the 2024 elections. We're seeing the coalition in Europe, like maybe some fissures in it, not broken, but maybe there's some cracks in it. I think that you wait long enough and the West will negotiate with itself, unfortunately.
Yeah, we have not ideal weather conditions in Europe like we did last year. That crack will turn into a crevice. Don't you think that Europe, if they, face natural gas problems, energy problems with a cold winter, last year they had, unusually warm winter, that could be, what really breaks apart the alliance.
It could, but I think that Europe has plenty of gas, and importantly, and I didn't have it in my commentary today, though I should have, and that is that strike in Australia at some Chevron plants has ended, which means that they only get Europe only gets about 15% of that gas, but it's a positive development. I think Europe's biggest problem is not so much going to be the winter, but it's going to be how to revive the economy when they're trying to reimpose this stability and growth pact, which basically tries to get countries to reduce their budget deficits. So without monetary support, they can't count on much fiscal support. And I think that leaves Europe in a weak economic position.
You have any numbers in euro that you're paying attention to, Mark?
Well, I like what you guys were talking about, that 106.10 area or so, 106. That's that FIBO retracement from last year's lows. I think we're going to have to go through that, partly because what I'm looking at is that a lot of people are still resisting. I don't see the capitulation yet. And I'm looking at the futures positioning, and the market, despite this, what is this, a 6-cent pullback, a 6.5 cent pullback on the euro, and the speculative community is still long euros. And sterling's come down. What, a dime?
Yeah.
And the speculative market is still long sterling. So I want to see a capitulation. I mean, it's not. I don't like to say it. My friends are long.
Is this off CFTC data?
Yes, CFTC data. Okay. Speculators still long euro, still long sterling, and I think they have to capitulate. They have to give it up the ghost before I can be more confident that a bottom's in place. So I'm looking at the possibility of maybe 104 in the euro. I'm looking at it. You got a chart up now of the sterling. I kind of see that as a head and shoulders pattern in sterling, and I've been looking at 120, and that 120.75 is the FIBO retracement, 38.2% of last year's of this big rally that you showed from last September.
Hey, Mark. It's Blake. I'm sorry, I was just listening into you, and I 100% agree with you. But don't you find it really astonishing that positioning hasn't changed much in this move that we've seen in the euro? I sit there and look at it every week, and I'm like, is this thing broken? Is this thing not working? Like, how is positioning not? How's this fast money participants not like panicked yet in the euro, decline of this magnitude?
Yeah, Blake, that's a good question. The only way I can understand it is that a lot of the people I know who trade the futures don't just trade the currencies from the long side or the short side, but in spreads. And so I suspect that some of the long sterling and long euro positions are being offset with short yen positions.
Yeah. Okay. Fair enough. Thank you. Thank you for your
another washout. So that would probably take the Dixie up towards a level I've been talking about. I thought there might be a little interruption before we got there, but Dixie could trade near 109, 108.99. It's 61.8 back up here.
Yeah, that's a bold call. I'm looking at, when I was talking with Blake about this earlier this week too, this is what I find in my experience. If I look for these big moves, that tells me I'm putting my stop at a say certain ratios away from my profit objective, say 3-to-1 or something like that. And so
Yeah.
if I'm looking for a home run, what that tends to mean for my own P&L is I have some big losses. And so instead of that, I like to just take smaller bites.
Yeah.
Maybe it's my
Grind
scar
it out.
tissue. And so
Yeah.
I think the next target for me is probably closer to 107.50 once we get above 106.
Okay, that's halfway back, Mark. Right
Yep,
there.
that's about the 50% retracement.
Right there.
Partly because
Okay.
again, Dale, I'm thinking that we're going to begin getting as early as next week softer economic data, but the next big number, non-farm payrolls, that October 6th, I think that's what we're going to begin seeing the data begin rolling over. Slower jobs growth. I think we're looking at something like about 150,000 jobs, which would be the lowest since early last year or so, non-farm payrolls. But again, we've got the strikes going, we got the student loans, we got the higher oil, we got tighter credit conditions. These higher interest rates take a bite. So I think the economy is going to rapidly stall in Q4.
Okay. So do you have a view on risk after, this recent action where we came off and put in a lower high, and there are certain things really they were calling a lot of these stocks, it was narrow, right? So they were calling them the Magnificent Seven, Amazon, Microsoft, Apple. To me, it looks like the Magnificent Seven lost their gun duel, and a lot of them are, headed towards Boot Hill. What do you think?
Yeah, so I definitely am bothered by yesterday's gap lower opening that you show here on the charts for
Yeah,
the
this is Amazon.
this is Amazon, but you see it in the S&P. I don't know enough about analyzing individual companies, but the S&P gap lower yesterday, disturbing because both yesterday and on a Wednesday closed on its lows.
Yeah.
But here's the thing that I would say is that, because I know we're all talking about higher interest rates weighing on stocks, but here we are, just about the end of Q3. The NASDAQ is up over 25% this year. And
Yeah.
even the S&P, I mean, up 12.8%. So we come
Right.
off a bit more today. But for someone like me, getting 10% in the S&Ps for the year, that's fine.
Yeah.
And so,
Cartwheel time at 20. Yeah.
yeah, and so I am concerned that probably more downward movement on stocks. And again, that's what's going to happen next month as we get into the earnings season. S&P 500 companies, so much of their earnings come from overseas, and the strength of the dollar is going to be cited, I think, increasingly as a weight on earnings. Even though people like me try to work with corporations and try to show them how to hedge and how to get favorable accounting treatment for the hedgings. So it's partly crocodile tears for these corporations who say that the currency costs them. I'm sympathetic to them, but at the same time, they've got plenty of tools to hedge. They will blame their earnings.
They better
on the
start
dollar strength.
listening to Marc Chandler and get their money over there to the bank so you could help them. That's all I could say. And so anything you want to wrap it with, my trading warrior brother? I mean, I everyone should include you in their intelligence gathering. That's for sure. So
Yeah, no, thanks. And I appreciate you guys posting the commentary. A while back, I would when I first launched my blog, Mark to Market, a lot of people were just using, we were all new at the internet at the time. But now I think that I find myself going for pages that I can get a lot of different news and not just one person. So even though I still put a lot of time and effort into my blog, I do appreciate you guys reposting it and sharing it with a larger community.
okay, well, we're all fans, and lots of respect for your work, Marc. I hope you have a great fall trading season, and really appreciate you coming here and even laying out some numbers on Euro and Dixie to guide us forward. So
Thanks. I think about like it's not like my boss once told me it's better to be lucky than smart, and that luck, right, is where opportunity meets preparedness, and so staying alert and looking for those opportunities, anticipating those opportunities. So thanks a lot for the time today.
All right. So, I agree with you, Marc. Some of my best ideas for the following week happen on the weekend. right? So plan ahead and you won't do impulsive trading. So appreciate you, Mark. Thanks very much for being here on a Friday. Everyone follow Mark at Mark Making Sense and go to his website and read what Mark has to say and include it in your intelligence gathering. Thank you, buddy.
Thanks a lot.
All right.
Good luck,
Mark
everybody.
Chandler. Mark Chandler, everybody. That's a wrap. For me, for the week, I hope we added value to what you're trying to accomplish in a pretty difficult endeavor. Recharge over the weekend, and above all, don't just count your pips, count your blessings. See everyone next week. Have a great weekend. See you, team. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.